ABA CRCM Practice Test 2026 is Certified Regulatory Compliance Manager.
Question 1. Unless the debt collector has express permission from the consumer or a court, the law prohibits communication with the consumer under the following conditions except: Option A. At an unusual time or place, such as before 8 a.m. or after 9 p.m. local time. Option B. When the debt collector knows the consumer is represented by an attorney and the attorney's name and address are known. Option C. At the consumer's place of employment if the debt collector does not know or has no reason to know that the employer forbids such communication. Option D. If the consumer has notified the collector in writing and asked that the collector ceases all further contact.
The correct answer is option C. At the consumer's place of employment if the debt collector does not know or has no reason to know that the employer forbids such communication. Communication at the workplace is only prohibited if the collector knows or has reason to know the employer forbids such communication.
Question 2. A debt collector may not abuse or harass the consumer by doing which of the following? Option A. Using or threatening to use violence or harm the physical person, reputation, or property. Option B. Using obscene, profane, or abusive language when communicating with anyone. Option C. Allowing a telephone to ring repeatedly with the intent to abuse or harass. Option D. Making telephone calls without meaningful disclosure of the caller's identity.
The correct answer is option D. Making telephone calls without meaningful disclosure of the caller's identity. While all options describe prohibited harassment, the text specifically identifies calling without meaningful disclosure of identity as an abusive practice.
Question 3. Debt collectors acquiring location information from a third party must do which of the following? Option A. Must identify themselves and, if expressly asked, must identify their employer. Option B. Must state that the call is to confirm or correct location information. Option C. May not communicate with the third party again unless the person asks the debt collector to or the initial response was erroneous. Option D. All of these.
The correct answer is option D. All of these. When seeking location information, debt collectors must identify themselves, state their purpose, and generally limit contact with the third party to a single instance.
Question 4. Which of the following are included in unfair practices during debt collection? Option A. May collect only the amount legally owed. Option B. May not solicit a post-dated check for the purpose of instituting criminal action, and must notify the consumer before depositing if post-dated longer than 5 days. Option C. May possibly communicate regarding a debt by postcard. Option D. May use a symbol indicating it is a debt collection business on the envelope. Option E. Sending legal notices via certified mail.
The correct answers are options A and B. May collect only the amount legally owed. May not solicit a post-dated check for the purpose of instituting criminal action, and must notify the consumer before depositing if post-dated longer than 5 days. Unfair practices strictly regulate the collection amount to what is legally owed and heavily restrict the handling of post-dated checks to prevent abuse.
Question 5. Validation of debt under the Fair Debt Collection Practices Act states that: Option A. Consumer must be sent debt validation in writing within 5 calendar days of initial communication unless contained in the initial communication or paid. Option B. If consumer disputes a debt in writing within 60 days, all collection activity must stop until verified. Option C. If consumer disputes a debt in writing within 15 days, all collection activity must stop until verified. Option D. If a consumer owes multiple debts and makes multiple payments, the debt collector must apply to debt in accordance with the consumer's direction.
The correct answer is option A. Consumer must be sent debt validation in writing within 5 calendar days of initial communication unless contained in the initial communication or paid. A debt collector must provide a written validation notice containing specific details about the debt within 5 days of the initial communication.
Question 6. What regulation governs the collection of checks and other cash and non-cash items and the handling of returned checks by Federal Reserve banks, and also covers rules governing funds transfers sent through Fedwire? Option A. Regulation Z. Option B. Regulation X. Option C. Regulation J. Option D. None of the above.
The correct answer is option C. Regulation J. Regulation J governs the collection of checks and other items by Federal Reserve banks and also provides rules for Fedwire funds transfers.
Question 7. It is a corporation or a non-depository institution that maintains an account with a reserve bank. What is it? Option A. Savings and loan associations. Option B. Clearing institution. Option C. A foreign banker. Option D. Insured credit unions.
The correct answer is option B. Clearing institution. A clearing institution is defined as a non-depository entity or corporation that maintains a settlement account directly with a Federal Reserve Bank.
Question 8. It is an instrument or promise or order to pay money sent by a sender and payable in a Federal Reserve District or sent to and collectible in funds acceptable to a reserve bank. An electronic image of this document is considered a valid instrument. Option A. Item. Option B. Debt collection form. Option C. Validation form. Option D. Correspondent check.
The correct answer is option A. Item. Under Regulation J, an item is defined as any instrument or order to pay money, including electronic images of substitute checks, handled by a reserve bank.
Question 9. An electronic image of an item together with electronic information describing that item in an approved format will be considered a valid instrument. Common forms of instruments are the following except: Option A. Checks drawn on a bank and payable on demand. Option B. Paychecks. Option C. Cash items payable on demand and collectible at par and accepted at the reserve bank. Option D. Non-cash items that a reserve bank classifies as requiring special handling.
The correct answer is option B. Pay checks. While checks, cash items, and non-cash items are official categories of instruments handled under Regulation J, a paycheck is simply a colloquial type of standard check.
Question 10. Reserve banks must issue operating circulars, which, together with Regulation J, govern the details of handling items through the reserve bank, including: Option A. Handling of government items and foreign instruments. Option B. Handling of foreign instruments. Option C. Handling of government items. Option D. Handling of clearing instruments.
The correct answer is option A. Handling of government items and foreign instruments. Federal Reserve Bank operating circulars detail specific handling procedures for specialized instruments, including government items and foreign drafts.
Question 11. One of the check collection requirements is sending items to reserve banks. In this requirement, Option A. A sender other than a reserve bank may send any item to the reserve bank with which it maintains an account. Option B. The handling sequence is deemed to be initial sender, administrative reserve bank, receiving reserve bank, and any other reserve bank. Option C. Reserve banks must receive cash items and other items at par. Option D. A foreign bank that maintains reserves under the International Banking Act of 1978. Option E. Non-member banks may bypass reserve banks for settlement.
The correct answers are options A and B and C. A sender other than a reserve bank may send any item to the reserve bank with which it maintains an account. The handling sequence is deemed to be initial sender, administrative reserve bank, receiving reserve bank, and any other reserve bank. Reserve banks must receive cash items and other items at par. Check collection rules define how senders transmit items to their administrative reserve bank and outline the specific handling and par value acceptance requirements.
Question 12. Any of the following foreign correspondence for which the Federal Reserve maintains an account except: Option A. A foreign bank. Option B. A foreign banker's lessee. Option C. A foreign state. Option D. A foreign correspondent or agency.
The correct answer is option B. A foreign banker's lessee. The Federal Reserve maintains accounts for foreign banks, states, and correspondents, but a foreign banker's lessee is not an authorized account holder category.
Question 13. By sending an item to a reserve bank, a sender, Option A, never authorizes the reserve bank to handle the item based on this regulation and the reserve bank circulars. Option B. Warranties for electronic items that are substitute checks. Option C. Warrants to each reserve bank handling the item that it has good title, that it has not been altered, and bears all endorsements. Option D, makes all warranties set forth in the Uniform Commercial Code and makes all Regulation CC warranties as if the electronic item were a paper item. Option E, requests immediate provisional credit without warranty.
The correct answers are options C and D. Warrants to each reserve bank handling the item that it has good title, that it has not been altered, and bears all endorsements. Makes all warranties set forth in the Uniform Commercial Code and makes all Regulation CC warranties as if the electronic item were a paper item. A sender legally warrants good title, lack of alteration, and full endorsement under the Uniform Commercial Code and Regulation CC when transmitting items to a reserve bank.
Question 14. The sender agrees to indemnify each reserve bank for Option A, any loss or expense resulting from sender's lack of authority. Option B, any action taken by the reserve bank within the scope of its authority in the handling of the item. Option C, an electronic item that is not a substitute check is not liable for any amount paid by a reserve bank attributable to its own lack of good faith. Option D, any warranty made by the reserve bank under Regulation J, Regulation CC, or the Uniform Commercial Code. Option E, all returned item fees charged by the paying bank.
The correct answers are options A and B and D. Any loss or expense resulting from sender's lack of authority. Any action taken by the reserve bank within the scope of its authority in the handling of the item. Any warranty made by the reserve bank under Regulation J, Regulation CC, or the Uniform Commercial Code. Senders must indemnify the reserve bank against losses due to lack of authority, authorized actions taken by the reserve bank, and breaches of warranty.
Question 15. The sender's liability for warranties and indemnities that a reserve bank makes for a substitute check is subject to the following conditions and limitations except. Option A. The sender of an original check is not liable for amounts paid by the reserve bank absent the sender's agreement to the contrary. Option B. The sender's liability under Regulation CC is not altered by the Regulation J provisions. Option C. Failure of sender to have authority to make the required warranties and agreements. Option D. A sender of an electronic item that is not a substitute check is not liable for any amount paid by a reserve bank attributable to its own lack of good faith.
The correct answer is option C. Failure of sender to have authority to make the required warranties and agreements. The failure of a sender to have authority is a trigger for indemnification liability, not a condition or limitation that protects or limits the sender's liability.
Question 16. The reserve bank may recover from the sender the attorney's fees if an action is brought against a reserve bank on the basis of Option A. Failure of sender to have authority to make the required warranties and agreements. Option B. Any action by the reserve bank within the scope of its authority in handling the item. Option C. Any warranty made by the reserve bank. Option D. All of the above.
The correct answer is option D. All of the above. The reserve bank is entitled to recover attorney's fees from the sender for lawsuits arising from the sender's lack of authority, authorized actions, or warranties made.
Question 17. A sender and any prior collecting banks grant a security interest to the sender's administrative reserve bank in all of their assets in the possession of the reserve bank to secure obligations. This security interest attaches when any warranty is breached. The reserve bank may take any action under applicable law to enforce its security interest, including exercising its right to set off amounts against any funds it holds. This situation holds true when Option A. Item is sent to a reserve bank. Option B. Reserve bank recovers. Option C. Bank makes for a substitute check. Option D. Sender identifies liability to reserve bank.
The correct answer is option A. Item is sent to a reserve bank. The statutory security interest automatically attaches to secure the sender's obligations immediately when an item is sent to the reserve bank.
Question 18. The reserve bank may recover by charging any account on its books maintained by the sender if Option A. The reserve bank makes written demand to sender to assume defense of the proceeding. Option B. Any action by the reserve bank within is the scope of its authority in handling the item. Option C. The sender has not made any other payment arrangement acceptable to the reserve bank. Option D. The sender files for bankruptcy protection. Option E. The reserve bank notifies the sender's board of directors.
The correct answers are options A and C. The Reserve Bank makes written demand to sender to assume defense of the proceeding. The sender has not made any other payment arrangement acceptable to the Reserve Bank. Recovery through direct account charges is permitted if the Reserve Bank has demanded the sender assume defense and no alternative payment arrangement exists.
Question 19. What is an agent or a subagent of the owner of an item whose agency terminates when it receives payment for an item and finally collected funds, makes the proceeds available to the sender, and the time for commencing all actions against it has expired? Option A, clearing agent. Option B, the Reserve Bank. Option C, foreign bank. Option D, foreign banker.
The correct answer is option B, the Reserve Bank. Under Regulation J, the Reserve Bank acts as an agent or subagent for the sender during the collection process until final payment is received and settled.
Question 20. By presentation or transmission of an item, a Reserve Bank warrants to a subsequent collecting bank and paying bank that: Option A, the Reserve Bank has good title to the item. Option B, the item has not been altered. Option C, the item bears all endorsements applied by parties that have previously handled the item in paper or electronic form. Option D, all of these.
The correct answer is option D, all of these. When presenting an item, the Reserve Bank passes on all warranties of title, lack of alteration, and complete endorsements to subsequent banks.
Question 21. Time to bring action against a Reserve Bank includes which of the following? Option A, claims against Reserve Banks for failure to act in good faith or exercise ordinary care must be brought within 2 years. Option B, claims against Reserve Banks for warranties given on electronic items that are not substitute checks must be brought within 1 year. Option C, claims against Reserve Banks for guarantees given on electronic items that are not substitute checks must be brought within 1 year. Option D, claims against Reserve Banks for failure to act in good faith or exercise ordinary care must be brought within 3 years. Option E, claims must be settled by an independent arbitration panel.
The correct answers are options A and B. Claims against Reserve Banks for failure to act in good faith or exercise ordinary care must be brought within 2 years. Claims against Reserve Banks for warranties given on electronic items that are not substitute checks must be brought within 1 year. Statutes of limitations restrict claims for lack of good faith to 2 years and claims regarding electronic item warranties to 1 year.
Question 22. While presenting items for payment, Option A, a Reserve Bank or a subsequent collecting bank may present an item for payment but does not send the item for presentment and payment. Option B, a Reserve Bank may send an item to a collecting bank with authority to present it for payment or send it for presentment and payment. Option C, a Reserve Bank may present an item for payment at the place requested by the paying bank, through a clearinghouse, or under a special agreement. Option D, within a Reserve Bank's district, the Reserve Bank may present the item indirectly to the paying bank. Option E, only electronic presentment is permitted.
The correct answers are options B and C. A Reserve Bank may send an item to a collecting bank with authority to present it for payment or send it for presentment and payment. A Reserve Bank may present an item for payment at the place requested by the paying bank, through a clearinghouse, or under a special agreement. A Reserve Bank has flexible authority to send items to collecting banks for presentment or to present directly at requested locations or through clearinghouses.
Question 23. A Reserve Bank may present a non-cash item for payment if instructed to do so by the sender and if the Option A, item provides that it must be presented for acceptance. Option B, item is payable elsewhere than at the residence or business of the payer. Option C, item sent directly to the paying bank or the non-bank payer. Option D, date of payment of the item depends on presentment for acceptance. Option E, item has a face value exceeding $1 million.
The correct answers are options A and B and D. Item provides that it must be presented for acceptance. Item is payable elsewhere than at the residence or business of the payer. Date of payment of the item depends on presentment for acceptance. Non-cash items require specific instructions and conditions for presentment, such as explicit requirements for acceptance or payment dates dependent on acceptance.
Question 24. A what must settle for an item with its administrative bank, whether or not it received the item from that bank, and settlement with its administrative bank is deemed to be settlement with the reserve bank that sent the item. Option A, paying bank. Option B, clearing agent. Option C, Regulation J. Option D, Regulation CC.
The correct answer is option A, paying bank. The paying bank holds the ultimate responsibility to settle for an item with its administrative reserve bank to complete the clearing cycle.
Question 25. Cash items payment proceeds must be available to the reserve bank by the latest of Option A, the next clock hour that is after the hour the paying bank receives the item. Option B, 9:30 a.m. Eastern Time. Option C, such other time as provided in the reserve bank's operating circulars. Option D, both Option A and Option B. Option E, the end of the current business day.
The correct answers are options A and B and C. The next clock hour that is after the hour the paying bank receives the item. 9:30 a.m. Eastern Time. Such other time is provided in the reserve bank's operating circulars. Proceeds for cash items must be available by specific strict deadlines, including the next clock hour after receipt, 9:30 a.m., or times dictated by circulars.
Question 26. When returning items to a reserve bank, the paying and returning banks, Option A, cannot disclaim the warranties, authorizations, and agreements whether or not the return check bears an endorsement of the paying bank or returning bank. Option B, authorize the reserve bank to handle the item in accordance with Regulation J and the operating circulars. Option C, warrant that the check bears all endorsements applied by all parties that handled the check in paper or electronic form. Option D, will not be liable for the failure of a paying bank to pay for an item. Option E, assume full liability for forged maker signatures.
The correct answers are options A and B and C. Cannot disclaim the warranties, authorizations, and agreements whether or not the return check bears an endorsement of the paying bank or returning bank. Authorize the reserve bank to handle the item in accordance with Regulation J and the operating circulars. Warrant that the check bears all endorsements applied by all parties that handled the check in paper or electronic form. Banks returning items must authorize the reserve bank's handling, pass on full endorsement warranties, and cannot disclaim these mandatory warranties.
Question 27. The liability of paying and returning banks is subject to the following conditions and limitations except Option A. The paying or returning bank sending an original check returned as a substitute check is not responsible for amounts the reserve bank pays under Regulation CC absent agreement. Option B. Regulation CC governs the paying and returning bank's liabilities when returning a substitute check. Option C. The paying or returning bank sending an electronic item that is not a substitute check representation will not be liable for losses attributable to the reserve bank's lack of good faith. Option D. Paying and returning banks agree to indemnify each reserve bank for any loss or expense resulting from the paying or returning bank's actions.
The correct answer is option D. Paying and returning banks agree to indemnify each reserve bank for any loss or expense resulting from the paying or returning bank's actions. The indemnification requirement for losses resulting from the paying or returning bank's actions is a liability obligation, not a condition limiting their liability.
Question 28. A reserve bank makes specific warranties when it handles what? For all items, it warrants return checks bear all endorsements. For all electronic items, it warrants all Regulation CC warranties as paper checks. For electronic items not representing substitute checks, it warrants accuracy, magnetic ink character recognition line information, technical conformance, and protection against double charging. Option A. Substitute check. Option B. Returning check. Option C. Cross-check. Option D. Returning item.
The correct answer is option A. Substitute check. The Reserve Bank makes these comprehensive warranties specifically when handling and transmitting substitute checks to ensure their legal equivalence.
Question 29. If the return check is an electronic item that is not a representation of a what, reserve banks will indemnify a bank to which the check is returned if the bank incurs losses from indemnities under Regulation CC in connection with a substitute check later created from the return check. Option A. Returning check. Option B. Substitute check. Option C. Cross-check. Option D. Returning item.
The correct answer is option B, substitute check. If the item is not a representation of a substitute check, the Reserve Bank indemnifies the receiving bank against losses related to the later creation of a substitute check.
Question 30. Which of the following are included in the persons covered under Fedwire transfer coverage? Option A, Reserve Banks sending or receiving payment orders. Option B, senders of payments to a Reserve Bank. Option C, banks receiving payments from a Reserve Bank. Option D, none of these. Option E, consumers initiating personal wires through a mobile app.
The correct answers are options A and B and C. Reserve banks sending or receiving payment orders. Senders of payments to a Reserve Bank. Banks receiving payments from a Reserve Bank. Regulation J Subpart B covers Fedwire transfers, specifically applying to Reserve Banks, senders to Reserve Banks, and banks receiving payment from Reserve Banks.
Question 31. Transfers involving entries to accounts maintained at two different Reserve Banks are: Option A, Fedwire transfers. Option B, interdistrict transfers. Option C, intradistrict transfers. Option D, any one of these.
The correct answer is option B, interdistrict transfers. Transfers settling between accounts held at two separate Federal Reserve Banks across different districts are classified as interdistrict transfers.
Question 32. Reserve banks may rely on numbers given in a payment order to identify an intermediary or beneficiary bank. Reserve banks, when acting as beneficiary's bank, may rely on the number in the payment order that identifies the beneficiary. These points are actually: Option A, Fedwire transfers. Option B, interdistrict transfers. Option C, intradistrict transfers. Option D, any one of these.
The correct answer is option A, Fedwire transfers. These rules regarding reliance on routing and account numbers are fundamental principles governing the execution of Fedwire transfers.
Question 33. In Sender's Agreement under Code of Federal Regulations 12 Part 210.28, it is clearly mentioned that: Option A, Reserve banks have the right to debit payment amounts from accounts of senders with the Reserve Bank. Option B, senders have the right to create overdrafts in their accounts. Any overdraft is due and payable at the end of the day or when the bank deems itself insecure. Option C, sender gives the Reserve Bank a security interest in all of sender's assets in the possession of the Reserve Bank to secure obligations. Option D, senders have 25 calendar days to notify a Reserve Bank of an erroneous payment order. Option E, senders must maintain a minimum daily balance of $1 million.
The correct answers are options B and C. Senders have the right to create overdrafts in their accounts. Any overdraft is due and payable at the end of the day or when the bank deems itself insecure. Sender gives the Reserve Bank a security interest in all of sender's assets in the possession of the Reserve Bank to secure obligations. The sender agrees that any overdrafts are immediately due and grants the Reserve Bank a security interest in assets held to secure these obligations.
Question 34. In Receiver's Agreement under Code of Federal Regulations 12 Part 210.28, it is clearly mentioned that: Option A, Receiving Bank authorizes the Reserve Bank to credit the receiving bank's account. Option B, an offline bank warrants that it does not act as an intermediary or beneficiary's bank for payment orders received for a bank beneficiary unless it notifies the Reserve Bank. Option C, a Reserve Bank has rights of a creditor to recover an overdraft, including the right of set-off. Option D, Reserve banks, when acting as beneficiary's bank, rely on the payment order identifying the beneficiary. Option E, receiving banks must confirm receipt within 1 hour.
The correct answers are options A and B. Receiving bank authorizes the Reserve Bank to credit the receiving bank's account. An offline bank warrants that it does not act as an intermediary or beneficiary's bank for payment orders received for a bank beneficiary unless it notifies the Reserve Bank. The receiving bank legally authorizes the Reserve Bank to credit its account, and offline banks make specific warranties regarding their intermediary status.
Question 35. Payment to a beneficiary is made at the earlier of the time when: Option A, the payment order is credited to the beneficiary's account or when notice of the credit is sent to the beneficiary. Option B, The amount is credited to the receiving bank's account at the reserve bank or when the payment order is sent to the receiving bank. Option C. The amount is debited to the receiving bank's account at the reserve bank or when the payment order is sent to the receiving bank. Option D. The payment order is debited to the beneficiary's account or when notice of the credit is sent to the beneficiary.
The correct answer is option A. The payment order is credited to the beneficiary's account or when notice of the credit is sent to the beneficiary. Final payment to the ultimate beneficiary occurs exactly when the funds are credited to their account or when they are formally notified of the credit.
Question 36. Which of the following primary purposes were behind the Electronic Fund Transfer Act? Option A. To provide disclosures to consumers who use electronic fund transfer systems. Option B. To provide consumers with limitations on liability for unauthorized electronic fund transfers. Option C. Both option A and option B. Option D. None of these.
The correct answer is option C. Both option A and option B. The Electronic Fund Transfer Act was designed to protect consumers by mandating clear disclosures and strictly limiting consumer liability for unauthorized transfers.
Question 37. Implemented by what regulation? The Electronic Fund Transfer Act is intended to provide certain rights to individual consumers using electronic fund transfer payment systems, and places responsibilities on financial institutions whose accounts are affected by these transfers. Option A. Regulation E. Option B. Regulation F. Option C. Regulation T. Option D. Regulation A.
The correct answer is option A. Regulation E. Regulation E is the specific federal regulation implemented by the Consumer Financial Protection Bureau to enforce the Electronic Fund Transfer Act.
Question 38. The Electronic Fund Transfer Act provides consumers with limitations on liability for unauthorized electronic fund transfers. It includes the following types of funds transfers except: Option A. Point-of-sale transfers. Option B. Automated teller machine transfers. Option C. Transfers initiated by fax. Option D. Withdrawals of funds, including merchant transactions where no electronic terminal is involved, if the customer's account is debited.
The correct answer is option C. Transfers initiated by fax. Transfers initiated by facsimile, paper checks, and wire transfers through Fedwire or similar systems are explicitly exempt from Regulation E coverage.
Question 39. What is a transfer that is authorized in advance to occur at substantially regular intervals, whereas payments requiring the consumer to take specific actions to initiate them are not this type of transfer? Option A. A pre-authorized electronic fund transfer. Option B. A post-authorized electronic fund transfer. Option C. A standard format electronic fund transfer. Option D. A customized electronic fund transfer.
The correct answer is option A. A pre-authorized electronic fund transfer. A pre-authorized electronic fund transfer is scheduled in advance to recur automatically at regular intervals without further action from the consumer.
Question 40. Initial disclosures under the Electronic Fund Transfer Act include: Option A. A summary of the consumer's liability for unauthorized transfers. Option B. Telephone number and address of person or office to be notified in case of any authorized transfer. Option C. The type of electronic fund transfer the consumer may make and any limitations on them. Option D. A summary of the institution's liability to consumer for failure to make or stop transactions. Option E. Information on how to apply for a mortgage loan.
The correct answers are options A and C and D. A summary of the consumer's liability for unauthorized transfers. The type of electronic fund transfer the consumer may make and any limitations on them. A summary of the institution's liability to consumer for failure to make or stop transactions. Initial Regulation E disclosures must summarize consumer liability, define available transfer types and limits, and outline the institution's liability.
Question 41. Electronic funds transfers requirements say that pre-authorized transfers that vary in amount must be communicated to the designated payee within how many days before the scheduled transfer, or the institution may give the consumer the option of receiving notice only when a transfer falls outside a specified range. Option A. 10 days. Option B. 20 days. Option C, 30 days. Option D, 15 days.
The correct answer is option A, 10 days. When a pre-authorized electronic fund transfer varies in amount from the previous transfer, the consumer must receive notice at least 10 days before the scheduled transfer.
Question 42. It is not required for accounts where the only electronic fund transfer allowed is a pre-authorized transfer to an account. If the account is a passbook account, the bank updates the passbook on presentation. If not, the bank sends it at least quarterly. What is it? Option A, a periodic statement. Option B, change in terms notice. Option C, unauthorized transfers disclosure. Option D, error resolution notice.
The correct answer is option A, a periodic statement. A periodic monthly statement is not required if the only electronic activity is pre-authorized credits. Instead, quarterly statements or passbook updates suffice.
Question 43. Under unauthorized transfers in Code of Federal Regulations 12 Part 205.6, prerequisites for consumer liability include all of the following except: Option A. If an access device was used, it must have been an accepted access device. Option B. Institution must have provided a means of identifying the consumer to whom the device was issued. Option C. Increased liability for the consumer. Option D. Institution must have provided in writing a summary of liability, contact information, and business days.
The correct answer is option C, increased liability for the consumer. Increased liability is a consequence of failing to report a loss timely, not a prerequisite condition the bank must meet to impose initial liability.
Question 44. It must provide in writing to the consumer at least 21 days before the effective date of any change in a term or condition disclosed in the initial disclosure statement if the change results in increased fees, increased liability for the consumer, fewer types of available transfers, or stricter limitations. What is it? Option A. Change in terms notice. Option B. Error resolution notice. Option C. Unauthorized transfers disclosure. Option D. Return items document.
The correct answer is option A, change in terms notice. A change in terms notice is required 21 days prior to implementing any changes that increase fees or liability or restrict electronic transfer capabilities.
Question 45. Which of the following are not limitations on liability in electronic fund transfers? Option A. $150 liability limit if consumer notifies the institution within 2 business days of discovery of loss or theft. Option B. If state law has more generous limitations of liability for the consumer, the state laws will govern. Option C. Full liability may be imposed if the consumer does not notify the institution within 30 days of the statement transmission for subsequent transactions. Option D. Extenuating circumstances such as hospital stays extend the time periods. Option E. A flat $500 deductible applies to all claims.
The correct answers are options A and D. $150 liability limit if consumer notifies the institution within 2 business days of discovery of loss or theft. Extenuating circumstances such as hospital stays extend the time periods. The standard initial liability limit is $50, not $150, and full liability triggers after 60 days, not 30 days, making A and D incorrect statements regarding the actual limits.
Question 46. An error in an electronic fund transfer includes any of the following. Option A. An unauthorized electronic fund transfer. Option B. The omission from a periodic statement of an electronic fund transfer that should have been included. Option C. A consumer's request for documentation required to be given on receipts or statements or for clarification of information. Option D. All of these.
The correct answer is option D, all of these. Under Regulation E, an error encompasses unauthorized transfers, statement omissions, computational errors, and requests for additional documentation or clarification.
Question 47. There is no error under Regulation E when there is a situation such as: Option A. The reversal of a direct deposit made in error is not considered an unauthorized transfer if made to the wrong account, a duplicate, or wrong amount. Option B. A request for duplicate copies of statements. Option C. The failure to receive a receipt from an electronic terminal when the transaction amount is $25 or more. Option D. A returning request for information for tax or record-keeping purposes. Option E. A bank automatically refunding a merchant error without a consumer claim.
The correct answers are options A and B. The reversal of a direct deposit made in error is not considered an unauthorized transfer if made to the wrong account, a duplicate, or wrong amount. A request for duplicate copies of statements. Routine requests for duplicate statements or tax information, and legitimate reversals of erroneous direct deposits, are explicitly excluded from the definition of an error.
Question 48. Who has the responsibility to notify the bank orally or in writing within 60 days of the statement transmission, providing their name, account number, and reasons for believing an error exists? Option A. Consumer. Option B. Financial institution. Option C. Reserve Bank. Option D. A third party.
The correct answer is option A. Consumer. The consumer bears the initial responsibility to notify the financial institution of a suspected error within 60 days of the statement date to preserve their rights.
Question 49. During an electronic fund transfer error resolution, if the institution determines that no error occurred or that an error occurred differently than alleged, it, Option A, must notify the consumer in writing of the date and amount of the debit to the account and honor third-party checks for 7 days. Option B, must promptly provide on request copies of documentation on which the institution relied to determine that no error occurred. Option C, must pay only items that the institution would have paid if the provisionally credited funds had not been debited. Option D, all of these. Option E, must freeze the consumer's account permanently.
The correct answers are options A and B and C. Must notify the consumer in writing of the date and amount of the debit to the account and honor third-party checks for 7 days. Must promptly provide on-request copies of documentation on which the institution relied to determine that no error occurred. Must pay only items that the institution would have paid if the provisionally credited funds had not been debited. If no error is found, the institution must provide a written explanation, offer supporting documentation, and honor third-party checks for 5 business days after debiting provisional credit.
Question 50. The institution need not provisionally credit the consumer's account if it requires but does not receive written confirmation of oral notice of error or if the error involves an account subject to the margin requirements of what regulation? Option A, Regulation T. Option B, Regulation X. Option C, Regulation Z. Option D, Regulation E.
The correct answer is option A, Regulation T. Brokerage accounts subject to the margin credit requirements of Regulation T are exempt from the mandatory provisional credit rules of Regulation E.
Question 51. The Office of the Comptroller of the Currency has determined that a national bank may not assume that a transaction is authorized simply because a consumer's PIN or ATM card was used. Banks must take reasonable steps to determine authorization, which might include reviewing. Option A, documentation or written, signed statements provided by the consumer. Option B, historical information on the customer's pattern of use such as time, location, and types of transactions. Option C, problems reported by regular customers regarding the access device or ATM. Option D, legal reports. Option E, the customer's complete medical history.
The correct answers are options A and B. Documentation or written, signed statements provided by the consumer. Historical information on the customer's pattern of use such as time, location, and types of transactions. Reasonable investigation requires looking beyond the PIN and analyzing customer usage patterns, location data, and any provided documentation to determine true authorization.
Question 52. To stop a payment of a pre-authorized transfer, the consumer must notify the institution orally or in writing at least. Option A, 3 days before the transfer is to occur. Option B, within 14 days of oral notice. Option C, binding after 14 days if no written confirmation is received. Option D, none of these.
The correct answer is option A, 3 days before the transfer is to occur. Regulation E grants consumers the right to stop a pre-authorized electronic fund transfer by notifying the institution at least 3 business days before the scheduled transfer.
Question 53. Payroll card accounts established directly or indirectly by an employer for the purpose of electronically transferring an employee's wages, salary, or other compensation on a recurring basis, are covered by Option A, Regulation E, Option B, Regulation T, Option C, Regulation CC, Option D, Regulation Z.
The correct answer is Option A, Regulation E. Payroll card accounts used to receive recurring electronic deposits of wages are expressly defined as accounts covered under the protections of Regulation E.
Question 54. As an alternative to providing a periodic statement, a financial institution holding payroll card accounts may make available Option A, the account balance, accessed through a readily available telephone line. Option B, an electronic history of the account that covers a period of at least 60 days preceding the time the consumer electronically accesses the account. Option C, a written history of account transactions, available on request that covers a period of at least 15 days preceding the request. Option D, a written history of account transactions, available on request that covers a period of at least 30 days preceding the request. Option E, a quarterly summary mailed to the employer.
The correct answers are options A and B. The account balance, accessed through a readily available telephone line. An electronic history of the account that covers a period of at least 60 days preceding the time the consumer electronically accesses the account. Institutions can bypass paper statements for payroll cards by providing phone access to balances and electronic or written access to a 60-day transaction history.
Question 55. In what year and under what act did Congress enact restrictions on the way financial institutions disclose information on customers to third parties, requiring disclosures at the establishment of the relationship and annually thereafter? Option A, Graham-Bliley Act of 1998. Option B, Gramm-Leach Act of 2000. Option C, Gramm-Leach-Bliley Act of 1999. Option D, Gramm-Leach-Bliley Act of 2001.
The correct answer is option C, Gramm-Leach-Bliley Act of 1999. The Gramm-Leach-Bliley Act, enacted in 1999, established strict privacy rules restricting how financial institutions share consumers' non-public personal information.
Question 56. The following institutions come under the heading of what? Institutions subject to the Commodity Futures Trading Commission, the Federal Agriculture Mortgage Corporation, and institutions chartered to engage in securitizations provided they do not sell non-public personal information to non-affiliated third parties. Option A, consumers. Option B, financial institutions. Option C, non-financial institutions. Option D, regulatory authorities.
The correct answer is option C, non-financial institutions. These specific entities are excluded from the Regulation P definition of financial institution and are treated as non-financial institutions under the privacy rules.
Question 57. Consumers are not considered to be customers if they do not have a continuing relationship with the financial institution. A relationship is considered not to be a continuing relationship if: Option A, the consumer obtains financial services only in isolated transactions, such as using an ATM. Option B, the consumer's loan is sold and servicing rights are retained. Option C, the consumer purchases airline tickets or travel insurance in an isolated transaction. Option D, the consumer is a beneficiary or grantor of a trust not administered by the bank. Option E, the consumer opens a checking account.
The correct answers are options A and C. The consumer obtains financial services only in isolated transactions, such as using an ATM. The consumer purchases airline tickets or travel insurance in an isolated transaction. Isolated transactions, like an ATM withdrawal or a one-time purchase of travel insurance, do not establish the continuing relationship necessary to make a consumer a customer.
Question 58. Non-public personal information under Regulation P includes: Option A, personally unidentifiable financial information. Option B, any list or grouping of consumers derived using personally identifiable financial information that is not publicly available. Option C, federal, state, and local government records. Option D, both option B and option C.
The correct answer is option D, both option B and option C. Non-public personal information includes lists derived from personally identifiable financial information, excluding legally accessible public government records.
Question 59. An institution must take steps to determine that information is lawfully made available to the public, including a determination. Option A, that it includes federal, state, and local government records. Option B, that the information is of the type that is available to the public. Option C, whether the individual can direct that the information not be made available to the public, and, if so, that the consumer has not done so. Option D, that a list of names, addresses of consumers of an organization that is not a financial institution. Option E, that the information is published in a private company newsletter.
The correct answers are options B and C, that the information is of the type that is available to the public, whether the individual can direct that the information not be made available to the public, and, if so, that the consumer has not done so. To consider information publicly available, the institution must determine it is a type available to the general public and that the consumer hasn't exercised a right to shield it.
Question 60. The initial privacy notice requirements state that, Option A, a notice must be given to a consumer before the institution discloses any non-public personal information to a non-affiliated third party, unless exempt. Option B, a notice is not required for a consumer who is not a customer if the institution does not disclose non-public information other than as authorized. Option C, only one notice is required to be provided on joint accounts, even if there is a separate guarantor. Option D, all of these.
The correct answer is option D, all of these. The initial privacy notice rules govern timing of delivery, exemptions for non-customers when no sharing occurs, and allow a single notice for joint account holders.
Question 61. Annual privacy notices are not required to be given to former customers, which includes cases where, Option A, a deposit account is active. Option B, a customer pays a loan in full or institution charges off the loan. Option C, the institution no longer provides any open-end statements or notices to the customer. Option D, none of these. Option E, a customer logs into online banking daily.
The correct answers are options B and C. A customer pays a loan in full or institution charges off the loan. The institution no longer provides any open-end statements or notices to the customer. A customer becomes a former customer, exempt from annual notices, when their loan is paid off, charged off, or their open-end account becomes inactive.
Question 62. A financial institution may provide a customer with a short-form initial notice at the same time as it delivers an opt-out notice. The short-form notice must, Option A, be clear and conspicuous. Option B, state that a privacy notice is available on request. Option C, explain a reasonable means by which the consumer may obtain that notice. Option D, may be disclosed to the affiliates. Option E, include the bank's annual financial statement.
The correct answers are options A and B and C. Be clear and conspicuous. State that a privacy notice is available on request. Explain a reasonable means by which the consumer may obtain that notice. A valid short-form privacy notice must be clear, state the full notice is available, and provide a reasonable, simple method to obtain the full notice.
Question 63. What means a direction by the consumer that the financial institution not disclose non-public personal information about the consumer to a non-affiliated third party, except as permitted by the regulation? Option A, opt-out. Option B, redisclosure. Option C, non-affiliated. Option D, both option B and option C.
The correct answer is option A, opt-out. An opt-out is the consumer's legally binding instruction preventing the financial institution from sharing their non-public personal information with non-affiliated third parties.
Question 64. Country A boycotts Country B and orders goods from ABC. Country A opens a letter of credit with Overseas Incorporated, requiring ABC to certify it does not do business with Country B. Overseas asks First National Bank to confirm the letter without stating the boycott. Overseas then mails the letter to First National. What may First National do? Option A. First National Bank must confirm it if it previously agreed to do so. Option B. First National Bank may advise ABC of the letter of credit and administer its disposal, but may not confirm it and must report it to the Department of Commerce. Option C. First National Bank may confirm it because the initial telegram did not contain the boycott clause. Option D. First National Bank must return the letter to overseas without notifying ABC.
The correct answer is option B. First National Bank may advise ABC of the letter of credit and administer its disposal, but may not confirm it and must report it to the Department of Commerce. U.S. banks cannot confirm letters of credit containing illegal boycott clauses. They may advise the beneficiary but must report the boycott request to the Department of Commerce.
Question 65. Issuing bank issues a letter of credit with a boycott provision for ABC. The letter allows negotiating banks to obtain reimbursement from issuing bank's account at First National Bank by certifying conditions are met. Issuing bank does not send First National a copy. May First National reimburse negotiating banks for the letter? Option A. Yes. First National Bank did not know of it, so it may reimburse a negotiating bank. Option B. No. First National Bank is under a duty to determine the underlying conditions of any letter of credit it pays. Option C. No. First National Bank should request a copy of the letter of credit at the time of its payment. Option D. Yes, but only if ABC confirms the transaction is legal.
The correct answer is option A. Yes. First National Bank did not know of it, so it may reimburse a negotiating bank. Because First National Bank is acting only as a reimbursing bank without knowledge or possession of the underlying boycott clause, it may process the reimbursement.
Question 66. First National Bank opened a letter of credit in favor of ABC for a sale to a boycotting country. The letter contains no boycott provisions, but the bank knows ABC agreed to supply a boycott certification to receive the letter of credit. What should First National Bank do? Option A. Implement the letter of credit because there is no boycott language on its face. Option B. Require ABC to indemnify the bank against any potential loss for participation in a boycott. Option C. Not implement the letter of credit. Option D. Have the letter of credit confirmed by a bank in the boycotting country.
The correct answer is option C. Not implement the letter of credit. A U.S. bank may not implement a letter of credit if it has actual knowledge that the transaction is conditioned on the beneficiary providing an illegal boycott certification.
Question 67. First National Bank is asked to finance a transaction with a boycotting country. Knowing the letter of credit will contain restrictive boycott conditions preventing implementation, the bank suggests the U.S. company set up a shell corporation in a non-boycotting country to be the beneficiary. Does the bank have any problem with this transaction? Option A. No. The transaction is now not subject to Department of Commerce regulations because the beneficiary is not a U.S. company. Option B. Yes. The transaction is set up to evade the regulation and First National Bank is liable. Option C. No. The bank is merely acting as a financial advisor. Option D. Yes. Only if the shell corporation is discovered by the boycotting country.
The correct answer is option B. Yes. The transaction is set up to evade the regulation and First National Bank is liable. Suggesting or assisting in the creation of a shell corporation specifically to bypass anti-boycott regulations is a direct violation known as evasion.
Question 68. First National Bank advises a boycotting country on U.S. investments. The country instructs the bank not to recommend any shares of blacklisted companies. First National Bank follows this instruction. Has First National Bank participated or cooperated in an international boycott under the Internal Revenue Service regulations by this action? Option A. Yes. The companies are the subject of a boycott. Option B. No. The bank may agree not to recommend certain companies. Option C. Yes, if the companies are part of a boycott. Option D. No, but the bank must report this action to the Internal Revenue Service.
The correct answer is option B. No. The bank may agree not to recommend certain companies. An agreement not to recommend certain investments as an investment advisor is generally not considered participation in a boycott under Internal Revenue Service rules.
Question 69. ABC signed a contract to export to a boycotting country. Payment is via a letter of credit confirmed by First National Bank, requiring ABC to certify none of its directors are nationals of boycotted countries. First National confirms the letter. Did First National participate in a boycott, and must it report it to the Internal Revenue Service? Option A, no. The bank's action was only ministerial. Option B, yes. The action was participation in a boycott and the bank must report the action to the Internal Revenue Service. Option C, no. Only ABC is required to report to the Internal Revenue Service. Option D, yes, but no reporting requirements were triggered.
The correct answer is option B. Yes, the action was participation in a boycott and the bank must report the action to the Internal Revenue Service. Confirming a letter of credit that requires a boycott-related certification based on nationality is active participation and triggers mandatory Internal Revenue Service reporting.
Question 70. ABC exports to a boycotting country. The letter of credit, confirmed by First National Bank, requires goods to be shipped on an eligible ship and the insurer to have a local agent. Local laws prohibit blacklisted ships and insurers. Did the bank's action constitute an agreement to participate in a boycott subject to reporting? Option A, yes. The action is an agreement to cooperate with or participate in a boycott and it is subject to the reporting requirements. Option B, yes. The action is an agreement to participate in a boycott but no reporting is required. Option C, no. The bank is just following local maritime laws. Option D, no. These are standard shipping clauses exempt from boycott regulations.
The correct answer is option A. Yes. The action is an agreement to cooperate with or participate in a boycott and it is subject to the reporting requirements. Confirming a letter of credit containing clauses that enforce a boycott against blacklisted vessels and insurers constitutes reportable cooperation with an international boycott.
Question 71. Which of the following businesses would be eligible to be an exempt person under the requirements of the Bank Secrecy Act? Option A, Jackson's Used Cars. Option B, Evanston Recreational Boats. Option C, L. Williams Seafood Restaurant. Option D, Goldsmith Aircraft Distributors.
The correct answer is option C, Al Williams Seafood Restaurant. A restaurant is a standard retail business eligible for Bank Secrecy Act Phase 2 exemption, whereas dealers in motor vehicles, boats, and aircraft are ineligible businesses.
Question 72. Fast Food, a nationwide restaurant chain, opened an account last year making daily cash deposits of $15,000 to $20,000. First National needs to determine if this company is an exempt person. What should the bank do first? Option A, provide an unlimited exemption for cash deposits and withdrawals. Option B, look in the newspaper or on the internet to determine if fast food stock appears on one of the listed exchanges. Option C, ask the company if it qualifies as a listed business. Option D, perform a corporate records check to determine if the company is chartered in the United States.
The correct answer is option B. Look in the newspaper or on the internet to determine if fast food stock appears on one of the listed exchanges. The first step in exempting a large corporate customer is checking if they are a listed public company on a major stock exchange, which qualifies them as a Phase 1 exempt person.
Question 73. Which of these customers would qualify as an exempt person? Nationwide Foods listed on the New York Stock Exchange, National Paper a subsidiary of Nationwide, Products Incorporated a boat dealer on the NASDAQ Capital Markets, or Century Enterprises a local restaurant making large deposits. Option A, all except for Nationwide Foods. Option B, all except for National Paper Products. Option C, all except for Century Enterprises. Option D, all except for Products Incorporated.
The correct answer is option D, all except for Products Incorporated. Products Incorporated is a boat dealer, which is an ineligible business for Phase 2 exemption, and NASDAQ Capital Markets does not automatically qualify it for Phase 1.
Question 74. Walker Enterprises, operating laundromats, has been a customer for 1 month. After due diligence, the bank opened the account. In the first 30 days, the company made 12 large cash deposits. Can the bank exempt this company now? Option A, no. It is not a corporation, but a sole proprietorship. Option B, no. It has not maintained an account at the bank for 12 months. Option C, no. It operates an ineligible business. Option D, yes. The bank conducted due diligence on the customer to determine that it had legitimate large cash transactions.
The correct answer is option D. Yes. The bank conducted due diligence on the customer to determine that it had legitimate large cash transactions. Under revised rules, a bank may exempt a Phase 2 customer after 2 months, or sooner if the bank conducts a thorough due diligence risk assessment establishing legitimate cash needs.
Question 75. First National Bank has exempt customers, alpha listed on a major exchange, beta meeting non-listed customer requirements, and zeta a payroll customer. For which customers must the bank conduct an annual review to determine continuing eligibility to be exempt from currency transaction reports? Option A, alpha. Option B, beta. Option C, zeta. Option D, beta and zeta.
The correct answer is option D, beta and zeta. Phase 2 exempt persons, such as non-listed businesses and payroll customers, require an annual review to ensure they continue to meet the exemption criteria.
Question 76. Mrs. Evans deposits $15,000 in cash to her account, explaining she received it in the mail from her sister in Europe. What responsibility does the bank have? Option A, complete a currency transaction report. Option B, complete a United States Customs Form 4790 report of international transportation of currency or monetary instruments. Option C, complete both a currency transaction report and a Customs Form 4790. Option D, complete a currency transaction report and encourage Mrs. Evans to file a Customs Form 4790.
The correct answer is option D. Complete a currency transaction report and encourage Mrs. Evans to file a Customs Form 4790. The bank must file a currency transaction report for the cash deposit over $10,000 and should inform the customer of her obligation to file the customs form for importing currency.
Question 77. For how long must a bank keep records of transactions involving currency in amounts greater than $10,000? Option A, 2 years. Option B, 3 years. Option C, 5 years. Option D, 7 years.
The correct answer is option C, 5 years. The Bank Secrecy Act mandates that financial institutions retain records of all transactions exceeding $10,000 in currency for a minimum of 5 years.
Question 78. John Smith purchased a cashier's check for $1,000 cash at 10 a.m. At 11:30 a.m. he purchased another for $2,500 cash. At 4 p.m. he deposited $8,000 cash after normal banking hours, recorded for Wednesday. What action should the bank take? Option A, none, because no single cash transaction exceeded $10,000. Option B, file a currency transaction report for $11,500. Option C, record the $1,000, $2,500, and $9,000 transactions on the monetary instrument sales log because the total exceeds $3,000. Option D, record the $1,000 and $2,500 transactions on the monetary instrument sales log because the total exceeds $3,000.
The correct answer is option D. Record the $1,000 and $2,500 transactions on the monetary instrument sales log because the total exceeds $3,000. The bank must record the 2 cash purchases of monetary instruments on the log because they total $3,500, exceeding the $3,000 threshold for a single business day.
Question 79. Records that must be retained for deposit accounts include which of the following? Option A, average daily balance. Option B, overdraft history. Option C, all amounts of currency deposited or withdrawn. Option D, customer's taxpayer identification number.
The correct answer is option D, customer's taxpayer identification number. The Bank Secrecy Act specifically requires banks to obtain and retain the taxpayer identification number for all deposit account holders.
Question 80. Mammoth Enterprises is a new customer and a wholly owned subsidiary of Mammoth Corporation. Which statement would make Mammoth Enterprises an exempt customer? Option A. Mammoth Corporation is a London corporation, trading on the London Stock Exchange. Option B. Mammoth Corporation is a U.S. corporation with unlisted stock. Option C. Mammoth Corporation is a U.S. corporation trading on the American Stock Exchange. Option D. Mammoth Enterprises is a U.S. corporation primarily in the investment banking business.
The correct answer is option C. Mammoth Corporation is a U.S. corporation trading on the American Stock Exchange. A subsidiary is exempt under Phase 1 if its U.S. parent corporation is listed on a major U.S. stock exchange like the American Stock Exchange.
Question 81. A teller supervisor discovers 5 counterfeit $20 bills in April, and 2 more in May and June. She has no knowledge of criminal activity by employees or customers and suspects no one. Which statement is true? Option A. She must report the counterfeit funds on a suspicious activity report and must name the most likely individual. Option B. She must report the counterfeit funds on a suspicious activity report but is not required to name any individual. Option C. She need not file a suspicious activity report on this incident because the total amount is less than $25,000. Option D. She need not report this incident on a suspicious activity report because each incident is less than $5,000.
The correct answer is option C. She need not file a suspicious activity report on this incident because the total amount is less than $25,000. A suspicious activity report is not required when the suspect is unknown and the total aggregated amount of the suspicious activity is less than $25,000.
Question 82. A compliance officer notices multiple sub-threshold cash deposits at one branch and cashiers check withdrawals at another branch over 6 weeks. What is the appropriate action? Option A. File a currency transaction report for the aggregated cash deposits. Option B. File a suspicious activity report detailing the structured cash deposits and the related check purchases. Option C. Close the account immediately without notice. Option D. Place a hold on all future deposits.
The correct answer is option B. File a suspicious activity report detailing the structured cash deposits and the related check purchases. The pattern of sub-threshold deposits at one branch followed by withdrawals at another strongly indicates structuring, requiring the filing of a suspicious activity report.
Question 83. A real estate agent frequently brings $7,000 to $15,000 in money orders, in $1,000 denominations, to buy a single cashier's check. What statement best describes the bank president's responsibility upon noticing this? Option A. The president should file a currency transaction report. Option B. The president should ignore it since money orders are not cash. Option C. The president should ensure a suspicious activity report is filed due to the suspicious nature of aggregating monetary instruments. Option D. The president should charge a higher fee for the cashier's checks.
The correct answer is option C. The president should ensure a suspicious activity report is filed due to the suspicious nature of aggregating monetary instruments. Aggregating numerous small denomination monetary instruments to purchase a single large instrument is a classic money laundering red flag requiring a suspicious activity report.
Question 84. Which of the following is an accurate statement according to the requirements of the Customer Identification Program regulations? Option A. A bank must always require documentary verification of a customer's identification. Option B. A bank may waive any part of the requirements if senior management approves the waiver and there is a good cause. Option C. A physical address or a post office box is acceptable for any new customer. Option D. The bank's program must enable it to form a reasonable belief about the identity of the person.
The correct answer is option D. The bank's program must enable it to form a reasonable belief about the identity of the person. The core legal standard of a customer identification program is that it must allow the bank to form a reasonable belief that it knows the true identity of the customer.
Question 85. When conducting a record search pursuant to a Financial Crimes Enforcement Network request, what must a bank search? Option A. All customer records from the previous 5 years. Option B. All accounts maintained within the previous 12 months and transaction records for 6 months. Option C. Only records that can be electronically searched. Option D. Nothing, searches are voluntary.
The correct answer is option B. All accounts maintained within the previous 12 months and transaction records for 6 months. Under Section 314A, banks must search accounts maintained during the preceding 12 months and transactions conducted outside an account during the preceding 6 months.
Question 86. A bank is conducting due diligence for a foreign correspondent bank account. Which of the following is not required information? Option A. The identities of the correspondent bank's true ownership. Option B. Information on the government licenses of the correspondent bank. Option C. Copies of the tax return of the correspondent bank. Option D. Information on the products and services the correspondent bank offers.
The correct answer is option C. Copies of the tax return of the correspondent bank. Due diligence requires understanding ownership, licensing, and services to assess risk, but does not mandate obtaining the foreign bank's actual tax returns.
Question 87. Which of the following transactions requires completion of a currency transaction report? Option A. Deposit of checks totaling $12,000 to a checking account. Option B. Cash purchase of a cashier's check for $7,800. Option C. Cash withdrawal of $3,000 from a checking account. Option D. Cashing of a $14,000 check for a customer.
The correct answer is option D. Cashing of a $14,000 check for a customer. A currency transaction report is triggered strictly by physical cash transactions exceeding $10,000, such as cashing a $14,000 check.
Question 88. On which of the following loans must a bank maintain records under the Bank Secrecy Act? Option A. All loans exceeding $5,000 and secured by real property. Option B. All loans exceeding $5,000, but not secured by real property. Option C. All loans exceeding $10,000 and secured by real property. Option D. All loans exceeding $10,000, but not secured by real property.
The correct answer is option D. All loans exceeding $10,000, but not secured by real property. The Bank Secrecy Act requires banks to maintain specific records for extensions of credit exceeding $10,000 that are not secured by real property.
Question 89. An individual makes a $6,000 cash deposit into a checking account and simultaneously buys a $7,000 cashier's check with cash. According to the Bank Secrecy Act, what is the bank required to do? Option A. File a suspicious activity report for $13,000. Option B. File a currency transaction report for the $6,000 cash deposit. Option C. Aggregate the transactions and retain information about the purchase of the cashier's check. Option D. Obtain the record-keeping information for the purchase of the cashier's check and complete a currency transaction report for the total cash in transaction of $13,000.
The correct answer is option D. Obtain the record-keeping information for the purchase of the cashier's check and complete a currency transaction report for the total cash in transaction of $13,000. The bank must aggregate multiple cash transactions conducted by the same person on the same day. $13,000 triggers a currency transaction report, and the cash purchase over $3,000 requires log record keeping.
Question 90. Which of the following is not considered an acceptable form of identification for an individual when completing a currency transaction report? Option A. U.S. passport. Option B. Long-term deposit account relationship. Option C. State-issued photo identification. Option D. Photo identification card issued by a local government agency.
The correct answer is option B. Long-term deposit account relationship. While signature cards exist for long-term customers, completing a currency transaction report specifically requires identifying the conductor using an official, unexpired, government-issued photo identification.
Question 91. Which of the following customers may be exempted under Phase 2 of the Bank Secrecy Act? Option A. Government agencies. Option B. Correspondent banks. Option C. Payroll customers. Option D. Businesses whose stocks are traded on a national stock exchange.
The correct answer is option C. Payroll customers. Phase 2 exemptions apply to non-listed businesses and payroll customers. Government agencies and listed businesses are Phase 1 exemptions.
Question 92. In which of the following circumstances is it least appropriate for a bank to file a suspicious activity report regarding Internet activity? Option A. Bank determines that one of its customers is the victim of identity theft. Option B. Bank becomes aware of identity theft of its domain name. Option C. Bank discovers that someone has hacked into its data system to obtain confidential customer data. Option D. Bank determines through transaction monitoring that a customer makes electronic transfers between his own checking and savings accounts just below the $10,000 level.
The correct answer is option D. Bank determines through transaction monitoring that a customer makes electronic transfers between his own checking and savings accounts just below the $10,000 level. Transfers between a customer's own internal deposit accounts are not cash transactions, so amounts just below $10,000 do not constitute illegal structuring requiring a suspicious activity report.
Question 93. When completing and filing a suspicious activity report, what is the bank not required to do? Option A. Submit a copy of the supporting documentation with the report. Option B. Submit the report within 30 days of the initial detection of facts. Option C. Report the information to the bank's board of directors. Option D. Maintain a copy of the report and supporting documentation for 5 years.
The correct answer is option A. Submit a copy of the supporting documentation with the report. Supporting documentation must be retained securely by the bank for 5 years and made available to law enforcement upon request, but it is not submitted with the actual report.
Question 94. What should a bank's Bank Secrecy Act compliance program include? Option A. All lobby notice requirements. Option B. The 1-year record retention requirements. Option C. Designation of individuals responsible for day-to-day compliance. Option D. A list of types of loans covered by the Act.
The correct answer is option C. Designation of individuals responsible for day-to-day compliance. A legally adequate Bank Secrecy Act compliance program must formally designate a qualified individual or individuals responsible for managing day-to-day compliance.
Question 95. A routine review of account records reveals that suspicious activity involving foreign currency has occurred in the account of one of the bank's directors. Which of the following actions should be taken first? Option A. A suspicious activity report should be filed. Option B. The bank's board of directors should discuss the account activity without the affected director being present. Option C. The bank's president should meet with the affected director to discuss the account activity. Option D. The bank should file a currency transaction report, checking the box that indicates the report is for suspicious activity.
The correct answer is option A. A suspicious activity report should be filed. The immediate legal obligation upon discovering suspicious activity involving an insider is to promptly file a suspicious activity report.
Question 96. A customer used $4,000 in cash to purchase traveler's checks. The compliance officer must determine compliance with financial record keeping. Which of the following pieces of information must be part of the bank's records for this transaction? Option A. The customer's date of birth. Option B. The customer's deposit account number. Option C. The serial numbers of the traveler's checks purchased. Option D. The name of the branch where the transaction occurred.
The correct answer is option C. The serial numbers of the traveler's checks purchased. For cash purchases of monetary instruments between $3,000 and $10,000, the bank must log the serial numbers of the instruments purchased.
Question 97. When all the required information is not provided by a person purchasing a cashier's check with $8,000 in currency, what should the bank do? Option A. Refuse the transaction. Option B. Complete the transaction and record available information. Option C. Complete the transaction and file a suspicious activity report. Option D. Complete the transaction and insist that the customer return with the required information.
The correct answer is option A. Refuse the transaction. If a customer refuses to provide the mandatory identifying information required for the monetary instrument log, the bank must refuse to conduct the transaction.
Question 98. Which of the following is most effective in strengthening an anti-money laundering program involving cash transactions? Option A. Review all deposits of $25,000 or more. Option B. Complete currency transaction report worksheets on all cash transactions of $5,000 or more. Option C. Complete suspicious activity report worksheets on all cash transactions of $5,000 or more. Option D. Monitor cash transactions of less than $10,000 for suspicious patterns.
The correct answer is option D. Monitor cash transactions of less than $10,000 for suspicious patterns. Monitoring sub-threshold cash transactions is the most effective method to detect illicit structuring designed to evade currency transaction report filings.
Question 99. For which of the following is a bank most likely to be in danger of receiving a cease and desist order? Option A. Repetition in a Bank Secrecy Act examination of a non-critical deficiency reported in a previous examination. Option B. Failure to document training to its part-time clerical employees. Option C. A 2% error rate on the bank's currency transaction reports. Option D. Failure to file suspicious activity reports.
The correct answer is option D. Failure to file suspicious activity reports. The failure to identify suspicious activity and file suspicious activity reports represents a critical breakdown in the anti-money laundering program, often triggering severe regulatory enforcement actions.
Question 100. Which of the following countries are currently subject to the Office of Foreign Assets Control Regulations? Option A. North Korea. Option B. Jordan. Option C. Bahrain. Option D. Russia.
The correct answer is option A. North Korea. North Korea is subject to comprehensive, country-wide sanctions and embargoes administered by the Office of Foreign Assets Control.
Question 101. What should a bank do when it receives a request from a customer to transfer funds to an individual in Iraq? Option A. Conduct the transfer as requested. Option B. Conduct the transfer if the individual and the financial institution are not on the specially designated nationals list. Option C. Block the transfer. Option D. Conduct the transfer and then notify the Office of Foreign Assets Control immediately.
The correct answer is option B. Conduct the transfer if the individual and the financial institution are not on the specially designated nationals list. Iraq is subject to targeted list-based sanctions rather than a comprehensive embargo, therefore, the transfer is permitted if no parties involved are on the specially designated nationals list.
Question 102. Acme Bank has many foreign wire transfers. Branch managers use printed specially designated national lists. The bank has a high risk for compliance. Which action would be most effective to strengthen the bank's compliance? Option A. Conduct compliance audits twice a year. Option B. Purchase and implement interdiction software for the wire transfer department. Option C. Fire the branch managers. Option D. Require all foreign wires to be approved by the board of directors.
The correct answer is option B. Purchase and implement interdiction software for the wire transfer department. For a high-risk bank conducting numerous foreign wires, manual list checking is inadequate. Implementing automated interdiction software is the most effective mitigation.
Question 103. State National Bank makes loans, transmits wires, and issues letters of credit. Which of the following transactions can it make without checking the specially designated national list and without incurring liability? Option A. Send a wire transfer via its correspondent bank in New York for a commercial customer. Option B. Sell a cashier's check payable to a third party. Option C. Cash an honest check over the counter for a non-customer. Option D. None. The bank can be liable for all.
The correct answer is option D. None. The bank can be liable for all. Office of Foreign Assets Control regulations apply to all U.S. persons and transactions. Banks are strictly liable for any transaction involving a blocked entity, making list checking essential for all transactions.
Question 104. A customer presents cash to wire to his spouse in Cuba. The spouse is identified on the specially designated national list. Under Office of Foreign Assets Control regulations, what should the bank do? Option A. Block the transfer. Option B. Conduct the transfer as requested and take no further action. Option C, conduct the transfer as requested and notify the Office of Foreign Assets Control immediately. Option D, conduct the transfer only if the bank determines that Cuba is not a blocked country.
The correct answer is option A, block the transfer. When a party to a transaction is a specially designated national, the bank is legally required to block the funds and report the blocking to the Office of Foreign Assets Control.
Question 105. Your institution has identified a transaction by an existing depositor that should be blocked under Office of Foreign Assets Control requirements. Before reporting the transaction, what should the bank do? Option A, reject the transaction. Option B, process the transaction. Option C, close the customer's account. Option D, place the funds in an interest-bearing account.
The correct answer is option D, place the funds in an interest-bearing account. Blocked funds must be immediately frozen and placed into a separate, interest-bearing account on the bank's books pending authorization from the Office of Foreign Assets Control.
Question 106. The bank president wants every transaction reviewed for Office of Foreign Assets Control compliance to avoid fines. What is the most appropriate statement the compliance officer could make? Option A. The bank is already in compliance because checks are performed on all new depositors. Option B. The bank has assessed its risk and has implemented risk-based procedures. Option C. The regulations do not apply because the bank does not conduct business with foreign nationals. Option D. Banks are usually not fined for violations unless they conduct transactions with blocked countries.
The correct answer is option B. The bank has assessed its risk and has implemented risk-based procedures. Office of Foreign Assets Control compliance is not a one-size-fits-all mandate. Regulators expect banks to implement a risk-based approach tailored to their specific transaction profile.
Question 107. Due to a software glitch, wires have been transmitted to a bank on the specially designated national list. Based on enforcement guidance, what should the Bank Secrecy Act officer do first to attempt to mitigate penalties? Option A. Review the wire policies and procedures to determine how the errors occurred. Option B. Stop and hold all wires to the bank on the specially designated national list. Option C. Investigate the customer who sends these wires. Option D. Self-report the activity to the Office of Foreign Assets Control.
The correct answer is option B. Stop and hold all wires to the bank on the specially designated national list. The immediate priority is to stop ongoing violations by holding all further wires to the blocked entity before conducting investigations or self-reporting.
Question 108. A bank offers safe deposit services in a vault with a door too narrow for wheelchair passage, which cannot be widened. It provides an accessible viewing room. What must the bank do to provide service to wheelchair customers? Option A. Remove the old vault and install a new vault to allow wheelchair access. Option B. Construct an alternative facility in which to store the safe deposit boxes of wheelchair customers. Option C. Require wheelchair customers to be accompanied by a walking individual to retrieve the safe deposit box for the customer. Option D. Bring the safe deposit box to the customer and provide an accessible area where the customer can view it.
The correct answer is option D. Bring the safe deposit box to the customer and provide an accessible area where the customer can view it. Under the Americans with Disabilities Act, if structural changes are not readily achievable, the bank must provide the service through alternative methods, such as retrieving the box for the customer in an accessible room.
Question 109. A bank received inquiries from visually impaired loan applicants. The bank wants to comply with the Americans with Disabilities Act without spending a significant amount of money. Which statement is true? Option A. The bank must have its loan application and disclosures translated into Braille. Option B. The bank may have a loan assistant read each loan application and disclosure document to the applicant and assist in completion. Option C. The bank may require the applicant to bring a sighted friend or relative to the bank to assist. Option D. The bank may make a policy not to lend money to blind persons.
The correct answer is option B. The bank may have a loan assistant read each loan application and disclosure document to the applicant and assist in completion. The Americans with Disabilities Act requires effective communication. Providing a qualified reader is an acceptable, cost-effective alternative auxiliary aid for visually impaired applicants.
Question 110. Which of the following activities is permitted under the Americans with Disabilities Act? Option A, issuing a policy against making loans to healthcare providers who regularly work with infectious patients. Option B, prohibiting smoking anywhere in the bank building. Option C, providing readers to visually impaired loan applicants for a $15 fee. Option D, requiring disabled depositors to use a teller window that is specially constructed for the use of disabled persons.
The correct answer is option B, prohibiting smoking anywhere in the bank building. The Americans with Disabilities Act explicitly permits entities to prohibit or restrict smoking in places of public accommodation.
Question 111. Under the Americans with Disabilities Act, what can an employer legally do? Option A, inquire about a disability if the disability is obvious to the interviewer at the time of the job interview. Option B, inquire about a disability when offering a job provided the disability is related to the job requirements. Option C, refuse to make an accommodation for a disability if 50 persons or fewer are employed. Option D, note the disability in the employee's file so that other managers will be aware of it when interviewing the employee for future position changes.
The correct answer is option B, inquire about a disability when offering a job provided the disability is related to the job requirements. Employers may ask disability-related questions or require medical examinations only after a conditional job offer has been made, provided it applies to all entering employees in that category.
Question 112. Which of the following employment practices is not legal under the Americans with Disabilities Act? Option A, establishing a policy that prohibits hiring alcoholic applicants. Option B, establishing a policy that prohibits smoking at any time at work. Option C, holding employees who are certified alcoholics to the same performance standards as other employees. Option D, refusing to hire an employee who currently uses illegal drugs.
The correct answer is option A, establishing a policy that prohibits hiring alcoholic applicants. Alcoholism is considered a disability under the Americans with Disabilities Act, making a blanket policy prohibiting the hiring of all alcoholics illegal discrimination.
Question 113. An employee's wife is HIV positive. Employees complain, and management limits his customer contact and asks him not to use the lunchroom. Does the company have potential Americans with Disabilities Act liability? Option A, no. His exposure could endanger other employees and customers. Option B, no. Because the hiring manager does not know that he actually has HIV, there is no liability. Option C, yes. Because the manager has associated him with this disease, the associated with rule applies. Option D, yes. Because the manager discriminated against him based on his association with a disabled person.
The correct answer is option D, yes. Because the manager discriminated against him based on his association with a disabled person. The Americans with Disabilities Act prohibits discrimination against an individual based on their relationship or association with a person who has a known disability.
Question 114. A loan officer learns that competing banks require car dealerships to refrain from selling installment contracts to local savings and loans. He wants to implement this at his bank. Is there a problem? Option A, no, because interest rates are not involved. Option B, no, because this decision would have no effect on the cost to the consumer. Option C, yes, unless there are enough car dealerships in town so that the savings and loans will not be adversely affected. Option D, yes, this is an illegal boycott.
The correct answer is option D. Yes, this is an illegal boycott. Agreeing with competitors to refuse to do business with certain entities constitutes an illegal group boycott and a per se violation of antitrust laws.
Question 115. A bank officer calls friends at competing banks to ask what interest rate they charge on a new product and what internal factors they use to set the rate. Based on this, the bank charges 2% more. Is this wrong? Option A, yes. Communicating with competitors for purposes of setting prices is wrong. Option B, no. Communication itself is never wrong regardless of the subject matter. Option C, yes. The bank should have charged the exact same rate. Option D, no. Researching competitor rates is standard practice.
The correct answer is option A. Yes. Communicating with competitors for purposes of setting prices is wrong. Directly communicating with competitors about pricing strategies and internal factors used to set prices facilitates illegal price fixing.
Question 116. A loan officer negotiating a commercial loan states that if the company will move some of its demand deposit accounts to the bank, it could get a lower interest rate. Is this wrong? Option A, yes. It violates the anti-tying provisions. Option B, yes. It is a restraint of trade. Option C, no, unless moving the accounts is a condition of the loan. Option D, no. The bank may condition the loan on the customer placing a deposit in the bank.
The correct answer is option D. No, the bank may condition the loan on the customer placing a deposit in the bank. The Bank Holding Company Act contains a statutory exception allowing a bank to tie a loan to a traditional banking product, such as a deposit account, at the same institution.
Question 117. A loan officer is negotiating a loan to a certified public accountant firm. He wants to make the loan conditional on the firm using the bank's subsidiary data processing firm. May he do so? Option A, yes, because it is not a bank service. Option B, yes, because it is not related to pricing. Option C, no, it is an illegal tie-in. Option D, no, unless the company was planning to obtain a new data processing service provider anyway.
The correct answer is option C. No, it is an illegal tie-in. Conditioning a loan on the purchase of a non-traditional banking service from a bank affiliate is an illegal tie-in under the Bank Holding Company Act.
Question 118. A credit agreement states the borrower cannot obtain additional unsecured credit from other lenders without the approval of the bank. Does this violate the anti-tying clause? Option A, yes, it is a restraint of trade. Option B, yes, unless the bank will reasonably allow additional credit at the borrower's request. Option C, no, since this clause relates to the soundness of the credit. Option D, no, unless the bank refuses to grant additional credit itself.
The correct answer is option C. No, since this clause relates to the soundness of the credit. Restrictions designed to protect the value of the bank's credit extension and ensure the borrower's financial soundness do not violate anti-tying laws.
Question 119. Which of the following would not be acceptable under the Bank Bribery Act and the relevant guidelines? Option A, a luncheon paid for by a bank customer after a transaction is closed. Option B, a gift of a hunting rifle to a loan officer from a borrower at Christmas. Option C, the gift of a gold watch to a loan officer from a customer who is the loan officer's cousin. Option D, an award of a writing pen and pencil set to a bank officer by a civic organization.
The correct answer is option B, a gift of a hunting rifle to a loan officer from a borrower at Christmas. Accepting an expensive gift, such as a hunting rifle, from a borrower poses a severe conflict of interest and violates the Bank Bribery Act, unlike family gifts or modest meals.
Question 120. Which of the following is not a written record the bank should retain in complying with the Bank Bribery Act? Option A, a copy of the bank's internal code of conduct. Option B, a list of all gifts received by bank officers during the year. Option C, disclosures of unauthorized gifts. Option D, a list of all bank officers' outside business interests.
The correct answer is option B, a list of all gifts received by bank officers during the year. While banks must retain codes of conduct and disclosures of unauthorized gifts or conflicts, logging every single permissible minor gift is not a regulatory requirement.
Question 121. Which of the following of a loan officer's outside business interests may be considered a conflict of interest that should be disclosed to the bank? Option A, his ownership of 4,000 shares of stock in a local car dealership not a bank customer. Option B, his wife's position as chair of the board of a local bank. Option C, his attendance at a party hosted by one of his customers where other financial institutions were represented. Option D, his role as honorary chair of a fund drive for a local charitable organization.
The correct answer is option B, his wife's position as chair of the board of a local bank. A spouse holding a high-level position at a competing financial institution presents a significant conflict of interest regarding confidential information and competition.
Question 122. A loan officer expresses a desire to build a house, and a homebuilder customer offers to build it at cost plus 5%. If the officer accepts the offer, can he continue to act as the loan officer? Option A, no. The value of the gift is too great. Option B, yes, if he discloses this fact to the bank. Option C, yes, if he does not let the discount on the house affect his decision-making process. Option D, yes, if the bank's code of conduct allows such activity.
The correct answer is option A. No, the value of the gift is too great. A substantial financial discount on a custom home construction is a high-value benefit that creates an insurmountable conflict of interest under the Bank Bribery Act.
Question 123. Which of the following factors would not be considered when evaluating whether specific behavior by a banker violates the Bank Bribery Act? Option A, the social and family ties of the banker. Option B, the standard for business amenities and entertaining in that particular part of the country. Option C, whether there was a demonstrable business purpose. Option D, whether a business transaction was consummated as a result.
The correct answer is option D, whether a business transaction was consummated as a result. The Bank Bribery Act criminalizes the corrupt intent of giving or receiving the bribe. Whether the transaction was actually completed is irrelevant to the violation.
Question 124. When does a gift accepted by a banker clearly violate the Bank Bribery Act? Option A, when it is given for personal reasons. Option B, when it is given with corrupt intent. Option C, when it is valued at a dollar amount exceeding $50. Option D, when it is not given in connection with a generally accepted holiday.
The correct answer is option B, when it is given with corrupt intent. The fundamental legal threshold for a violation of the Bank Bribery Act is that the gift or benefit must be given or received with corrupt intent to influence a bank transaction.
Question 125. Which of the following transactions does not require prior approval of the Federal Reserve Board? Option A, the formation of a bank holding company. Option B, the acquisition by a bank holding company of a subsidiary. Option C, the acquisition of 25% of voting stock of a bank by another bank, in good faith, in its fiduciary capacity with no power to vote. Option D, the acquisition of 25% of voting stock of a bank by another bank in its fiduciary capacity for the benefit of the acquiring bank's employees.
The correct answer is option C, the acquisition of 25% of voting stock of a bank by another bank, in good faith, in its fiduciary capacity with no power to vote. Acquiring voting shares in good faith in a fiduciary capacity without sole discretionary voting authority is generally exempt from prior approval requirements.
Question 126. A holding company filed an application on March 1st. The Federal Reserve asked for more info on March 15th. On April 1st, the Reserve Bank received and accepted the completed application. On April 5th, it notified the company of the April 1st acceptance. Under normal rules, by what date must the board act? Option A, June 1st. Option B, April 30th. Option C, June 5th. Option D, July 1st.
The correct answer is option A, June 1st. The Federal Reserve Board normally must act on an application within 60 days after the Reserve Bank officially accepts the completed application.
Question 127. Which of the following activities is not a permissible non-banking activity for a bank holding company? Option A, servicing mortgage loans. Option B, providing general courier services to the businesses around the bank office. Option C, providing mortgage loan data processing services to mortgage companies. Option D, acting as a broker for credit life insurance.
The correct answer is option B, providing general courier services to the businesses around the bank office. General courier services are commercial activities not closely related to banking. Permissible courier services are strictly limited to transporting financial instruments and documents.
Question 128. A bank holding company foreclosed on stock of a manufacturing corporation on September 1st and exercised voting rights. On December 31st, it transferred the stock to a subsidiary to market it for sale. What is the longest time period it can possibly hold the stock? Option A, up to 2 years from September 1st. Option B, up to 5 years from September 1st. Option C, up to 2 years from December 31st. Option D, up to 5 years from December 31st.
The correct answer is option B, up to 5 years from September 1st. Shares acquired in satisfaction of a debt previously contracted may be held for an initial 2 years, with up to 3 one-year extensions, totaling 5 years from the acquisition date.
Question 129. Which of the following is not a factor considered by the Federal Reserve Board when it evaluates an application under Regulation Y? Option A, the financial strength of the applicant. Option B, the management strength of the applicant. Option C, the current non-banking activities of the applicant. Option D, the effect of the transaction on competition.
The correct answer is option C, the current non-banking activities of the applicant. The board evaluates financial and managerial resources, competitive effects, and convenience and needs, but the applicant's existing non-banking activities are not a primary statutory factor for a banking acquisition.
Question 130. Which of the following is not a corporate practice required of bank holding companies? Option A, each bank subsidiary must file a notice with the Federal Reserve before offering a new product. Option B, each bank subsidiary must conduct its operations in a safe and sound manner. Option C, each bank subsidiary must be insured by the Federal Deposit Insurance Corporation. Option D, each bank subsidiary must file a notice with the Federal Reserve before purchasing any of its own securities.
The correct answer is option A. Each bank subsidiary must file a notice with the Federal Reserve before offering a new product. Bank subsidiaries are not required to file a notice with the Federal Reserve simply to offer a new banking product in their ordinary course of business.
Question 131. For which of the following business activities must a bank holding company obtain prior approval of the Federal Reserve Board? Option A, operating an auto club service. Option B, serving as a safe deposit company. Option C, operating as a management consulting firm for financial institutions. Option D, selling installment loan data processing.
The correct answer is option A, operating an auto club service. Operating an auto club is generally a non-banking activity that requires specific prior board approval, unlike traditional data processing or safe deposit services.
Question 132. A national bank plans to acquire an insurance agency and make it an operating subsidiary. The bank is well managed and adequately capitalized. What regulatory action must it take? Option A, complete the sale of the agency and notify the Office of the Comptroller of the Currency within 10 days. Option B, complete the sale of the agency and notify the Office of the Comptroller of the Currency within 30 days. Option C, no regulatory notice is required. Option D, notify the Office of the Comptroller of the Currency before completing the sale.
The correct answer is option D. Notify the Office of the Comptroller of the Currency before completing the sale. National banks generally must file a notice or application with the Office of the Comptroller of the Currency prior to establishing or acquiring an operating subsidiary.
Question 133. A state non-member bank plans to purchase a company as a financial subsidiary and will send a notice to the Federal Deposit Insurance Corporation. Which factor would not be relevant to the consideration of the acquisition? Option A, the bank's asset size. Option B, whether the bank is well capitalized. Option C, the bank's Community Reinvestment Act rating. Option D, the impact of the acquisition on the bank's safety and soundness.
The correct answer is option A, the bank's asset size. While capital levels, Community Reinvestment Act ratings, and safety and soundness are critical statutory factors, the absolute asset size of the bank is not a standalone approval criterion.
Question 134. A subsidiary of First National Bank can legally participate in all but one of the following businesses. In which business may the subsidiary not legally participate? Option A, selling securities. Option B, selling insurance. Option C, developing real estate. Option D, providing financial planning advice.
The correct answer is option C, developing real estate. Real estate development is considered a commercial activity and is generally an impermissible activity for a national bank and its operating subsidiaries.
Question 135. In which of the following cases would First National Bank be required to give a branch closing notice? Option A, removing its ATM from the local grocery store. Option B, opening a deposit-taking facility in a kiosk during a college fair for one weekend. Option C, moving its central branch across the street. Option D, closing its near-town neighborhood branch.
The correct answer is option D, closing its near-town neighborhood branch. Closing a traditional brick-and-mortar branch permanently triggers the 90-day branch closing notice requirements under federal law.
Question 136. In which of the following situations does a bank need to post a branch closing notice? Option A. A bank closes a branch temporarily because of heavy hurricane damage. Option B. A bank closes a branch in a suburban neighborhood because business has not adequately developed there. Option C. A bank decides not to exercise its option to purchase a branch it has been temporarily running for the Federal Deposit Insurance Corporation. Option D. A bank closes a branch and moves it 850 feet down the street.
The correct answer is option B. A bank closes a branch in a suburban neighborhood because business has not adequately developed there. Permanent closure of a branch for business reasons requires a formal branch closing notice, unlike temporary closures, short-distance relocations, or resolving failed bank branches.
Question 137. Second National has decided to close a neighborhood branch. Which of the following actions is not required of the bank under federal law? Option A, publish a notice of the closing in the local newspaper. Option B, send a notice to its regulatory agency. Option C, send notices to the branch customers. Option D, post a notice at the branch.
The correct answer is option A, publish a notice of the closing in the local newspaper. Federal law requires notifying the regulator, mailing notices to customers, and posting a sign at the branch, but does not mandate publishing the notice in a newspaper.
Question 138. A bank decided to close a branch in a small town. A community group complains to the federal agency because it is the only bank in town. What must the bank do in light of this protest? Option A, repost the notice and wait an additional 90 days. Option B, send the federal agency a detailed statistical analysis consistent with its policy proving why closing is necessary. Option C, meet with the community group, explain their reasoning, and help the group find alternative services. Option D, nothing is required.
The correct answer is option D, nothing is required. While regulators may facilitate a meeting between the bank and community groups, the law does not require the bank to alter its closing plans or perform additional actions due to a protest.
Question 139. In which of the following cases is a branch closing notice required? Option A, Bank A decides to stop cashing checks for non-customers at its neighborhood branch. Option B, Bank B and Bank C merge, closing Bank B's branch to merge it into Bank C's branch. Option C, Bank D is closing its drive-through facilities, although its regular facility is remaining. Option D, Bank E is closing its facility due to outmoded buildings, commissioning a study to determine if reopening is feasible.
The correct answer is option D. Bank E is closing its facility due to outmoded buildings, commissioning a study to determine if reopening is feasible. Closing a branch indefinitely, even while studying future feasibility, constitutes a branch closing and requires the statutory notices.
Question 140. A bank has a standalone automated teller machine in a high-crime area and decides to close it. According to branch closing policy statements, which action should the bank take? Option A. No action is required because an automated teller machine is not, by definition, a branch. Option B. Post a notice at the automated teller machine at least 30 days before the intended closing date. Option C. Notify the bank's federal regulatory agency at least 90 days before the intended closing date. Option D. Mail a notice to all customers at least 90 days before the intended closing date.
The correct answer is option A. No action is required because an automated teller machine is not, by definition, a branch. The branch closing notification laws explicitly exclude automated teller machines from the definition of a branch, so no formal closing notices are required.
Question 141. Which of the following must be included in a branch closing notice to a bank's regulatory agency? Option A. Comments from customers who oppose the closing. Option B. Detailed statement of the reasons for the closing. Option C. Copy of the notice to be sent to affected customers. Option D. Copy of board minutes reflecting the decision to close.
The correct answer is option B. Detailed statement of the reasons for the closing. The notice to the federal regulatory agency must include a detailed statement of the specific reasons for the decision to close the branch.
Question 142. A bank is planning to sell 8 branches. The compliance officer participates on an oversight committee. What should be the compliance officer's primary concern? Option A. That the bank's revenues will not be affected severely. Option B. That the branches are closed in accordance with bank policy. Option C. That customers of the branches will continue to have access to banking services. Option D. That the bank's confidential information is returned to the main office.
The correct answer is option B. That the branches are closed in accordance with bank policy. The compliance officer's primary responsibility is ensuring that the transaction adheres strictly to the bank's policies and all regulatory requirements governing branch closings and transfers.
Question 143. If a bank receives a request for financial disclosure, how may the bank fulfill this request? Option A. Provide copies of the call reports covering the current and previous year. Option B. Provide a copy of its statement of condition covering the year immediately preceding the request. Option C. Provide a copy of its most recent, unaudited financial statement. Option D. Provide copies of its uniform bank performance reports for 3 consecutive years.
The correct answer is option A. Provide copies of the call reports covering the current and previous year. Banks can satisfy annual financial disclosure requirements by providing copies of their current and previous year's call reports.
Question 144. Which of the following actions is acceptable under the financial reporting regulations? Option A. Attaching a narrative explanation by management of the reasons for a cease and desist order as a part of the annual disclosure. Option B. Attaching a copy of the bank's last safety and soundness examination to the annual disclosure. Option C. Including a statement that indicates that the bank's regulatory agency has reviewed the financial information. Option D. Using an unaudited financial statement for the past 2 years as an annual disclosure statement.
The correct answer is option A. Attaching a narrative explanation by management of the reasons for a cease and desist order as a part of the annual disclosure. Management may include an optional narrative discussing the financial impact or reasons behind formal enforcement actions in the annual disclosure.
Question 145. A bank may include all of the following in the narrative portion of its financial disclosure except for one. Which of these pieces of information cannot be disclosed? Option A. Information relating to mergers and acquisitions. Option B. Information related to a regulatory enforcement action that currently applies to the bank. Option C. An excerpt from the latest regulatory examination prepared by the bank's regulatory agency. Option D. The bank's future plans for product development.
The correct answer is option C. An excerpt from the latest regulatory examination prepared by the bank's regulatory agency. Federal law strictly prohibits the publication or disclosure of confidential regulatory examination reports or any excerpts from them.
Question 146. Which of the following sources is the least desirable to use when monitoring a correspondent bank's capital? Option A. A national rating agency's report on the correspondent bank. Option B. The correspondent bank's own call report. Option C. The correspondent bank's annual report to shareholders. Option D. A national newspaper's story on the correspondent bank's financial condition.
The correct answer is option D. A national newspaper's story on the correspondent bank's financial condition. While newspapers provide news, they are not official, verified, or sufficiently detailed financial documents suitable for formal correspondent risk monitoring.
Question 147. Bank B is a correspondent of Bank A. Which of the following must be included in Bank A's calculation of credit exposure to Bank B? Option A. A loan to a customer from Bank A secured by Bank B common stock. Option B. Bank B's purchase of U.S. government T-bills on behalf of Bank A under an overnight repurchase arrangement. Option C. Bank A's deposit account of $1 million in Bank B. Option D. A letter of credit issued by Bank B and pledged against a customer's debt at Bank A.
The correct answer is option C. Bank A's deposit account of $1 million in Bank B. Direct deposit accounts held at the correspondent bank create direct credit exposure that must be included in the exposure calculation under Regulation F.
Question 148. Which of the following is not a requirement of Regulation F? Option A. Writing and maintaining policies and procedures for managing exposure to correspondent banks. Option B. Monitoring the exposure to correspondent banks on a regular basis. Option C. Establishing internal limits on exposure to correspondents. Option D. Providing quarterly reports to the Board of Directors of compliance audit results.
The correct answer is option D. Providing quarterly reports to the Board of Directors of compliance audit results. Regulation F requires policies, regular monitoring, and exposure limits, but does not strictly mandate quarterly compliance audit reports to the board.
Question 149. Which of the following loans is clearly not subject to the Internal Revenue Service mortgage interest reporting requirement? Option A. A loan made to purchase securities, secured by rural acreage. Option B. A loan made to finance a college education, secured by a piece of commercial real estate. Option C. A loan made to purchase a lot on a lake, secured by a certificate of deposit. Option D. A loan made to purchase a residence, secured by the dwelling.
The correct answer is option C. A loan made to purchase a lot on a lake, secured by a certificate of deposit. The Internal Revenue Service mortgage interest reporting rules apply to loans secured by real property. A loan secured by a certificate of deposit does not qualify.
Question 150. Which of the following actions subjects a lender to mortgage interest reporting requirements? Option A. The lender holds mortgage loans in the course of its trade or business. Option B. The lender is a qualified Federal Housing Administration or Veterans Affairs lender. Option C. The lender receives at least $500 in interest on a mortgage loan during a calendar year. Option D. The lender offers unsecured home improvement loans.
The correct answer is option A. The lender holds mortgage loans in the course of its trade or business. The reporting requirement applies to any person who holds mortgage loans in the course of their trade or business and receives $600 or more in interest.
Question 151. If the lender is subject to the mortgage interest reporting requirement, which of the following actions is not required? Option A. The lender must file an information return with the Internal Revenue Service. Option B. The lender must report the amount of interest and points on the information return. Option C. The lender must report the loan balance as of December 31st of the year preceding the year the report is filed. Option D. The lender must send a statement to the borrower.
The correct answer is option C. The lender must report the loan balance as of December 31st of the year preceding the year the report is filed. The Internal Revenue Service Form 1098 requires reporting the interest and points paid, but does not require reporting the year-end principal loan balance.
Question 152. Information reports for mortgage interest must include which of the following details? Option A. Name, address, and taxpayer identification number of the borrower. Option B. Purpose of the loan. Option C. Address of the property securing the mortgage. Option D. Fair market value of the property at the time of the loan.
The correct answer is option A. Name, address, and taxpayer identification number of the borrower. Form 1098 must accurately include the payer's name, address, and taxpayer identification number to ensure proper tax credit application.
Question 153. Mr. Roberts paid interest $2,500 on a car loan secured by the car, $550 on a stock loan secured by a lake lot, and $1,000 on a tax loan secured by a rental house. How much interest will the bank report to the Internal Revenue Service? Option A, $4,050. Option B, $1,000. Option C, $1,550. Option D, $2,500.
The correct answer is option B, $1,000. The bank reports the $1,000 from the loan secured by the rental house. The lake lot loan interest is under the $600 threshold, and the car loan is not secured by real estate.
Question 154. A borrower made 13 payments on Loan A, with the last received January 2nd, totaling $1,000 in the first 12 and $155 in the 13th. On Loan B, she made 12 payments, received December 23rd, totaling $2,000, including $100 accrued into January. How much interest must the bank report? Option A, $1,155 for Loan A and $2,000 for Loan B. Option B, $1,155 for Loan A and $2,100 for Loan B. Option C, $1,000 for Loan A and $2,000 for Loan B. Option D, $1,000 for Loan A and $1,900 for Loan B.
The correct answer is option C, $1,000 for Loan A and $2,000 for Loan B. Interest is reported in the year it is actually received. The January payment for Loan A is reported next year. The prepaid interest on Loan B is reported in the year received.